Hi everyone. Today let's talk about Jerome Powell's speech set for tomorrow. Then we'll get into the economic data as well as the charts. Then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Jerome Powell is expected to speak tomorrow, and sometimes he says things that can affect the markets, even at Jackson Hole. I don't really expect anything crazy from him, but you always have to pay attention to him when he's out there speaking in public, and that is going to happen tomorrow. So far, the economy is on solid ground, and inflation is continuing to go lower at a pretty steady pace. Of course, markets are nervous about this, and they have been selling off for a little bit. We rallied here just over the last few days, and then today we absolutely cratered, potentially in anticipation of things he might say tomorrow, taking some risk off the table. And it does seem like the markets have accepted the idea that the Fed is going to execute higher for longer rates. The market has been hesitant on accepting that, but finally it seems like we have. And they keep saying things like inflation might drift higher once again, but we have not seen that quite yet. Moving over to the economic calendar for today, durable goods came in higher than expectations, but month-over-month orders worse than expectations. Jobless claims still holding very steady. Fed balance sheet rolled off just a few billion, a little bit less than usual. Looking at tomorrow, Jackson Hole continues. We got Michigan data. Fed Powell speaking at 10:05. Not a whole lot, just that Fed Powell speaking on Friday. Moving over to Max Payne, still sitting at 441. You can see a lot of puts in the market. Might see a little bit of a rally tomorrow. We dipped further than I thought we were going to based off of Max Payne. You can see 436 is an absolute put wall, and we're currently sitting down around 437. I wouldn't expect to go too much lower from current levels. Definitely interesting. A finish in between 442 and 445 would make sense, which would be a little bit of an aggressive rally, so depends on what Fed Powell says tomorrow. Moving over to the charts, what a dumpster fire of a day. We were at that resistance, we chopped sideways in the pre-market, broke down massively on the first hour of the day, hit the trend, broke down from there, took out these previous lows. We've definitely shifted the structure, and this looks a lot more like a bear flag. We thought that it might have been looking like that, but we were still holding in this structure, and we did start to accelerate to the upside a little bit. But now obviously all of that has reversed. Everything looks weaker now. 4-hour chart, big breakdown, momentum tipping lower, RSI breaking the 50 line. We are at an area where we could find some support, 435.88, and Max Payne says we should finish a little bit higher on the day tomorrow. But like I said, everything's going to depend on what Jay Powell says. If he says something crazy, we could absolutely see this take out these lows, and that would make me expect some lower prices, potentially all the way down to 431. Moving over to the NASDAQ here on the hourly, very similar setup. Took out this trend line early in the session, took out multiple levels, massive move lower. You can see on the 4-hour chart, we did have a test of this trend line, which I added here today. So marking the top from 19 July, this consolidation here at the end of July. And now we marked this top here. So that's definitely a trend line worth watching now. Absolutely setting up a lower high versus this previous high, and everything looks a little bit weaker. If it takes out this level at 360.44, then we could see a breakdown to 357.54, or maybe even trend support down at 354.36. Moving over to the Russell and the Dow. The Russell actually looked okay. Obviously, big bearish move like everything else, but it did hold this level here at 183.28. Came into that zone, bounced a little bit after hours. If it takes that out, this is going to be much more bearish in my opinion. And you can see zooming out what that would look like. Big move down, bull flag, breakdown, potentially moving much lower. You could almost argue that this would be a left shoulder head, right shoulder setting up as well. That would look absolutely bearish. And if that does follow through, that means we're going to be moving much lower down to maybe 172.60. Moving over to the Dow, you can see here we also broke down. So now we've consolidated, broke down, consolidated, broke down. Continues to look very bearish on the Dow. Next level 339.11 or 335.91. Moving over to Apple and Tesla on the 4-hour. Apple broke down right to that next level. After taking out 178.58, paused at 176.15, right on the money. Tesla testing that 21 EMA once again. As long as this holds, you could actually trade this a little bit bullishly. It did take out 232.57 again, but that seems to be in the middle of this range, so probably not a great level for right now. I would use that 21 EMA a little bit more. Again, if that breaks, then you're looking at 214 to the downside. Moving over to staples and discretionary. Staples continuing to break down through a wick to the 21, right at this previous low from Tuesday. Looks weak. Discretionary hit 166.78. Did not quite get to the 55 and then broke down from that level. Still higher than this previous low, so it's not broken completely down. If it breaks this previous low in that 162-ish area, that's going to look even more bearish. Similar structure, big move down, chopping higher, potentially setting up for another big move down. Moving over to breadth, you can see we got a wick up to that 40-ish level on the 50 chart. Momentum is still ticking higher, which is interesting. But of course, price action is king and it continues to move lower here. Overall, both took out their levels and it does look bearish. Looking at 43.55 potentially to the downside. 50 average looking at 26.39 going into tomorrow's session. Both chopping at oversold conditions, so still could be a consolidation. Definitely interesting. But again, if this breaks down here further, we could be looking for a move down into that 15 area on the 50 average, or potentially all the way down to 36 here on the 200-day average. Moving over to the dollar on the 4-hour and the daily, you can see we completely bounced off of that 55 EMA here on the 4-hour chart. Rallied back up to new highs, everything looking strong once again on the dollar. This wick rejection on the daily chart had me thinking we might be holding that 103 level, but we ended up bouncing very strongly off the lower trend, and everything looks bullish once again. Still could absolutely be a rising wedge pattern, but it is starting to look a little bit more bullish and potentially looking to break out similar to what Apple did on its rising wedge. Moving over to the volatility indices, move index not doing much of anything. VIX on the other hand bounced off that 21 and the trend line like we talked about, got right back up to that previous trend, holding here. If it rejects here tomorrow and we start to see a little bit of a rally, certainly possible, then we're kind of chopping in this zone. If it breaks out and pushes back to 1850 or potentially up to 20, that could be giving us a signal for that bigger down move, potentially using J. Powell as the catalyst to make new lows. Moving over to my accounts, you can see I did not clean up as well as I should have on that move down. I didn't close everything out as quickly as I could have, and I definitely took a little bit bigger hit than I should have. Otherwise, looking at positions I have left over, I still have a covered call here. I did roll out and down to 183 for a $1.50 credit, so I can potentially profit up to 184.50. If we get a little bit of a bounce from current levels, certainly possible. NASDAQ positions, I took off 200 shares pretty early in the session, which helped out, but I did have some puts that I had put on, which got squeezed to the downside and I got stopped out on those. But I did put on some calls, as you can see here, to protect myself a little bit more to the downside, which absolutely helped me not lose too much money. I had 400 shares on the NASDAQ and it did go down more than $7 on the day, which could have been a massive loser. Ended up only losing around 0.6% on the day, especially on a day where the NASDAQ was down 2%. Overall, not terrible, definitely could have done better, and very much playing defense going into tomorrow's session. Let me know down in the comment section what you think Jerome Powell is going to say tomorrow and where you think the markets are going to go. Will we get the continuation down or will we find a bounce? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.